With financial maths, there's a number of things we need to look at. Firstly, there is a wage. This is a payment made that can change week to week depending on how many hours you work or what time of the day you work. So say, for example, if you work for 38 hours in a week, but for 35 of those hours you are paid at normal rates, which means just a normal working day. But for 3 of those hours you get paid at time and a half. That means that you get an extra amount of money on top of your normal pay. So for example, if you normally earn $24 an hour, in this particular week, 35 of those hours are at your normal pay. So you get 35 lots of 24. But on top of that, you work another 3 hours at time and a half. So time and a half means you times it by 1.5 or 1.5 at the going rate of $24 an hour. If you add those up with your calculator, you end up getting $948 for the week. And that's a wage because it can change depending on how many hours you work. Then we have a salary. A salary is a fixed amount that you get for the year, and it might be paid to you either monthly, weekly, fortnightly, depends on what the employer wants. Say, for example, you get a salary of $84,000, and you want to know how much that's going to be per week. You have to remember that there are 52 weeks in a year, so you would divide that by 52. Using your calculator once again, that would end up being $1,615. It goes to 3,846, but the 4 is smaller than halfway, so we'd forget about that one, and your pay would be $1,615.38 per week, and that's a salary. Another way you could get paid is maybe by commission. Commission is where you get paid a percentage of what you sell. So say, for example, you're told that whatever you sell, you get 23% of the sales. And if you happen to sell in a particular time period, if you sell $3,500 worth of goods, then what you're going to do is you're going to have to times that by 23%. And using your calculator, 23% of 3,500 is $805. So you get $805 for selling $3,500 worth of goods. Now, some places that do commission also they could give you a retainer, and that's in case you don't sell much in a particular week. So in this same example, say if your employer said, well, you still get 23% of sales, but you also get a retainer of $500 per week. Then that means in a particular week, if you sold $3,500 worth of goods, you get the $805, but you also get the $500. So in total, you would get $1,305 for the week. It's sort of an incentive to get you to sell more things because then you're going to get more pay for that week. Then some places offer holiday loading, which in Australia is 17.5% of 4 weeks of your pay. So say, for example, if you get $2,980 a fortnight, remember that a fortnight is 2 weeks, and you want to know how much extra pay you would get for your holiday loading. So holiday loading is 17.5% of what you would normally make in 4 weeks. Now, you make $2,980 in a fortnight, but I want 4 weeks, so I'm going to have to double that, because then that is what you get in 4 weeks, and I want 17.5% of that. Working that out with your calculator, that means you get $1,043. Now, that's for 4 weeks. So if you wanted to figure out how much extra you get in your pay for a week, then I could divide that by 4 and get $260.75. So even though you get $2,980 a fortnight, when you apply the 17.5% holiday loading just for 4 weeks, you would get an extra $260.75 per week just for that month. Then there's superannuation. Now, superannuation is a payment made by the employer into an investment fund that you suggest, and that will help you provide money for when you retire. So say, for example, you earn $3,982 in a month, and your company is going to pay you superannuation payments of 9.25% in that month. So if I want to work out what my super is, or what I would get for that month, I have to find out what 9.25% of 3,982 is. So that means the company would invest into my super fund $368.34. Now, I don't get that in my pay. It goes into a fund so that when I retire, it adds up so that I have more money to retire on. Then lastly is GST. Now, GST stands for Goods and Services Tax, and in Australia it's 10% on most goods and services. Now, there are two types of questions that you would get. If GST has to be added to something that costs $325, so that's without GST, then the GST is going to be 10% of that. So 10% of $325 is $32.50. So the GST that would have to be added to something that's costing $325, then adding those two together, then the price including GST would be $357.50. So adding those two costs together. So the $325 is without GST, you add on the 10%, so it will now cost $357.50 with GST. But if you've got an amount of money, $732 say, and the GST has already been included in that price, and you have to work out what the GST was. So your $732 is not only 100%, it's 110%, because the 100% of the original price and then the 10% of the GST. So $732 is 110% of what you would pay if there was no GST added. Now, I want to find out the GST, so I actually want 10%. So what do I have to do to this number to get 10%? Well, if I divide it by 11, that will give me 10%. But remembering equations, whatever you do to one side, you have to do to the other. So 110% divided by 11 gives me 10%, which is what I want because that's the amount of the GST. Then 732 divided by 11, using your calculator, ends up being $66.55 when you round it off. So $66.55 is the GST. So if something worth $732 didn't have to have GST included, then if I subtract those two amounts, I would end up with $665.45. That's with no GST. So the two types of questions you have to get your head around.